All right, so we're taking a deep dive into SBI Card. They're huge in India, the biggest name in credit cards, and their latest financial report. Well, it's like a roadmap showing us exactly how they're winning, especially in a market that's absolutely exploding with digital payments right now. We've got the transcript from their Q3 FY25 earnings call. It's basically like we're eavesdropping on their conversation with investors.
It is fascinating because they're hitting these major milestones. They just crossed the 2 crore cards in force mark.
Yeah.
But at the same time, the economic environment is, it's a bit tricky. So in this deep dive, we're going to be looking at more than just their numbers. We're going to be figuring out how SBI Card is riding this wave of India's digital economy.
Okay, so first things first. India's digital economy is booming. The report even highlights how digital payments are just skyrocketing.
Yeah, and it's not just hype. UPI transactions, for example, they saw a record 16.73 billion transactions in December 2024 alone. That's an 8% jump from just the month before. The scale of it is mind-blowing.
It is absolutely mind-blowing. And in the middle of all of that, credit card spending is also going up, especially for online shopping. The RBI data shows credit card spending hit 1.88 lakh crore in December 2024, and over 1.14 trillion of that was on e-commerce platforms.
Exactly, and that's where SBI Card is so strategically placed. They have a market share of 18.7%. And crossing that 2 crore cards mark, it shows their customer base is expanding really rapidly.
They're a major player for sure. So how are they attracting and engaging all of these customers? They ran that Kushion Ka Utsav campaign during the festive season, right? Offering all kinds of deals.
Right. They partnered with, giants like Amazon and Flipkart. It was smart, especially targeting those big spenders during the festive season. But it's not just about these one-time campaigns. They're also playing the long game.
Okay, I'm all ears. What's the long game?
They've launched this hyper-personalization platform. Think of it as tailoring the customer experience. Every interaction, every offer is customized. They're aiming to increase what's called customer lifetime value, basically how much a customer spends with them over time.
Ah, so it's not just about getting new customers, it's about keeping them happy and spending.
Exactly. And they're also using AI to streamline their application process. It's all about efficiency and making sure that the right people get approved.
Smart move. Okay, let's get to the heart of it, their financial performance. They added 11.75 lakh new accounts in Q3 FY25. That's a 7% year-on-year growth, which is pretty impressive, especially because they're being very selective about who gets approved.
It shows that they're not just chasing numbers. They're focused on quality, which is really important right now, with the economy being a bit shaky. And it looks like this approach is working. Their retail spending remains strong, hitting 80,792 crore. That's a 10% jump year on year.
Hold on, so people are spending even though the economy isn't doing so great? Where is all this spending happening?
Well, SBI Card saw a lot of growth in categories like consumer durables, furnishings, apparel, and jewelry. Basically, people are still spending money on things they want, not just things they need.
Interesting. It seems like people are feeling confident enough to spend on those non-essentials.
All right, and get this. Online spending represented 58.5% of their total retail spending over that 9-month period.
Wow, that really shows you how important these digital channels are for SBI Card. It also connects back perfectly to that digital economy boom we were just talking about.
Absolutely. Now let's talk numbers. Total revenue reached 4,767 crore, a 5% growth compared to the last quarter. However, their profit after tax, or PAT, came in at 383 crore. That's a 30% decrease compared to the same period last year.
Wait, so revenue is up, but profit is down. Something doesn't add up. What's going on there?
That's a great question. A big part of that dip in profit is due to increased credit costs, something we'll get into a little bit later. But first, let's look at a few other key metrics. Their receivables, meaning the money they're owed from credit card users, grew by 12% year on year, hitting 54,773 crore.
Okay, so people are spending and SBI Card is expecting to get paid back. But you mentioned that receivables growth is expected to slow down.
Yes, that is what they're anticipating. And here's why. They're noticing that newer customers, the ones with better credit scores, have lower revolver rates. Revolver rates are essentially the percentage of people who carry a balance on their card month to month instead of paying it off in full. So these high-quality customers are being more responsible with their credit.
That's surprising. I would thought with spending up, more people would be carrying balances. So even though spending is increasing, the way people are using their cards is changing.
Exactly. And this shift has a big impact on SBI Card's profitability, which brings us back to those credit costs.
All right, let's talk credit costs. The report mentions challenges in asset quality. They specifically point to more default across the credit card industry, saying it's due to stress in the unsecured portfolio.
Yeah, that's not totally unexpected given the economic climate. But what's interesting is that SBI Card is taking proactive steps to tackle this. They've been fine-tuning their approval process, making sure they're lending to the right people, and they've been managing their portfolio more carefully. This has actually led to a reduction in new delinquencies.
So they're trying to get ahead of the problem, but is it enough? We've seen other lenders struggle with similar issues. Are they being overly optimistic?
That's a valid point. It's a
That
delicate balance. They have to balance growth with managing risk. And there are already some positive signs. Their gross non-performing assets, or GNPA. Basically, the percentage of loans that might not be repaid held steady at 3.24%, and they're expecting it to improve in the coming quarters.
Okay, so the GNPA is looking stable, which is good, but their credit costs still jumped to 9.4%. How are they explaining that?
They're attributing that increase to a lag effect from earlier delinquencies. Basically, those past issues are still impacting their current costs. However, they're confident that as their risk management strategies take hold, we'll see a moderation in credit cost.
It sounds like they're walking a tightrope, trying to balance growth with keeping those credit costs in check.
Absolutely. It's a challenge the entire industry is facing, not just SBI Card. Now let's shift gears a bit and highlight some key points. From the analyst Q&A portion of their earnings call, naturally the analysts were really interested in the topic of credit costs and write-offs.
I bet they were. What did SBI Card's management have to say about that? Did they give any concrete answers?
Well, they said that they believe the credit cycle is at a turning point, and they expressed confidence that credit costs will improve. They really emphasized the steps they've been taking to tighten their lending criteria and improve portfolio management, which is already evident in those reduced delinquency flows we talked about.
So are they feeling optimistic?
I'd say cautiously optimistic. They acknowledge that the pace of improvement depends on things they can't fully control, like the overall economy and what's happening in the unsecured lending space.
That makes sense. You can't predict everything. What else did analysts want to know about?
They were curious about how SBI Card's super selective approach to approving new customers is impacting their growth. Management reiterated that they're all about balancing growth with managing risk, even if that means slower growth in the short term.
Tough choices, but necessary choices.
Exactly. The analysts also wanted to understand customer behavior, specifically what's happening with minimum due payments and those revolver rates.
Interesting. What insights did they get from that?
SBI Card noted that they're seeing better minimum due payment behavior. Basically, people are making those minimum payments more consistently. However, they don't think those revolver rates will change significantly from their current levels. And here's something really interesting. There were also discussions about how those UPI transactions, we talked about them earlier,
Yeah.
might be impacting credit card usage.
That's a hot topic for sure. What's SBI Card's take on that? Are they worried?
They acknowledge the massive popularity of UPI, but emphasize that it caters to different needs compared to credit cards. They believe both UPI and credit cards will coexist, each serving those distinct customer needs.
It'll be fascinating to see how this all plays out. UPI is so convenient, but credit cards offer those perks and rewards. It's a battle for space in our wallets.
Absolutely. So we've covered a lot of ground here. We've talked about India's booming digital economy, dug into SBI Card's financial performance, and even got a glimpse into their earnings call with analysts.
We've seen their wins, their challenges, and how they're strategizing in this really complex market. But what does it all mean? What's the big takeaway here?
Well, SBI Card, just like many players in the industry, is facing some headwinds, especially when it comes to asset quality. But they are taking action. They're working to manage risk, strengthen their portfolio, and make their operations as efficient as possible. And something I find really interesting is their focus on personalized customer experiences.
Yeah, that hyper-personalization platform definitely stood out to me. It seems like they're betting on giving customers a truly unique experience, but is that enough to stand out in such a competitive market?
It could be a key differentiator, for sure. But this raises a big question. How can SBI Card achieve strong growth and maintain good profitability when those credit costs are still high?
That's the million-dollar question.
It is. Keep an eye on their future earnings calls to see how they're handling this balancing act. It'll be fascinating to see how those customer-centric strategies and risk management practices impact their bottom line in the coming quarters.
Definitely a story that's still unfolding.
Absolutely. What jumps out at you from this deep dive? What are the key takeaways that you'll be watching for as SBI Card moves forward?
Honestly, I'm really intrigued by those lower revolver rates. It seems counterintuitive, but it suggests that at least some people are using credit responsibly, even when the economy is uncertain.
That's a great observation. It suggests that SBI Card might be successfully attracting a more financially savvy customer base. What else caught your attention?
Well, I'm curious to see how their efforts to improve asset quality actually pan out. Will their credit costs genuinely start to moderate? That's a big question mark for me.
That's a key metric to watch for sure. And what about their focus on personalization and customer engagement? Do you think that will translate into stronger customer loyalty and drive spending? These are all questions that only time will answer.
It's going to be fascinating to see how it all unfolds.
Absolutely. This deep dive has definitely given us a lot to think about, but we're just getting started.
Stay tuned for part 2 of our deep dive into SBI Card's Q3 FY25 performance. We'll be analyzing their strategic priorities and exploring how emerging trends could impact their business.
We'll dig up more insights and connect the dots, giving you a clearer picture of the forces shaping SBI Card's future. Until then, keep those credit cards swiping responsibly.
And keep learning. Welcome back. So we're digging deeper into SBI Card's world. And one of the most interesting things I'm seeing is this kind of clash between traditional finance and the rise of all these fintech companies.
It's like watching two worlds collide, isn't it? You've got these big established players like SBI Card with a huge customer base and years of experience in, well, managing credit risk.
Exactly. They've got that brand recognition and a really deep understanding of the market.
And then on the other side, you have all these agile fintech startups disrupting everything, coming up with innovative products, often targeting very specific niche groups of customers.
It's like a total David and Goliath situation. But here's the thing. I think both sides have something to offer.
I completely agree. SBI Card, for example, has actually been actively partnering with fintech companies to make their offerings even better. They've teamed up with players in payments, lending, even data analytics.
So it's not just about competition, it's about collaboration too.
Exactly. SBI Card realizes they can't just ignore all the innovation coming out of the fintech world. By working with these startups, they can tap into cutting-edge tech, reach new customers, and just offer a more well-rounded set of financial solutions.
It's a win-win for everyone involved. Now let's zoom in on something we talked about earlier, how customer behavior is changing. We talked about those lower revolver rates. But there's more to this story.
One trend that really stands out is the increasing popularity of buy now, pay later, or BNPL for short.
Yeah, BNPL has just exploded, especially among younger folks. It's everywhere.
And it's easy to see why. You get that instant gratification, those flexible payment terms, and often very little to no interest charges.
It's tempting for sure, but does it make you nervous at all?
Well, it does raise some concerns about people overspending and racking up debt, especially those who might not fully grasp the implications of putting off those payments.
Yeah, it's a double-edged sword for sure. So how does this all relate to SBI Card? Are they just watching this BNPL wave from the sidelines?
Not at all. They're very aware of this whole BNPL trend, and they've even started offering their own BNPL-like products.
So they're not letting this disruptor take over. They're joining the game.
They are. They're trying to find ways to integrate these new payment preferences into their existing offerings. It's a delicate balance, though.
I can imagine. They need to cater to what their customers want, while also being responsible about managing risk. Speaking of risk, let's talk about another challenge SBI Card is facing: credit card fraud.
It's a big concern, definitely. And it's only growing as online transactions increase.
Feels like everything is happening online these days.
SBI Card has been putting a lot of resources into fraud detection and prevention, using advanced tech like artificial intelligence and machine learning.
It's like an arms race. As the fraudsters get smarter, so do the tools needed to catch them.
Exactly. But it's not just about fancy tech. It's also about educating customers.
Yeah, empowering people to protect themselves is so important.
Absolutely. They've been running campaigns to raise awareness about things like phishing scams, identity theft, other common fraud tactics.
Knowledge is power, right? Now let's switch gears to something a bit more positive. I'm really interested in SBI Card's commitment to financial inclusion.
It's a critical topic. And SBI Card has been making efforts to expand their reach, bringing financial services to those who haven't had access before, especially in rural areas.
Access to these services can be life-changing for people. It's about empowering people financially.
They've been leveraging their connection with State Bank of India, using their massive network of branches to reach customers, even in those really remote locations.
Yeah, it makes sense to utilize that existing infrastructure.
They've also been developing products specifically designed for certain groups, people with limited credit history or lower incomes.
It's about creating opportunities for everyone to participate in the financial system. So, as we wrap up this part of our deep dive, let's recap what we've discovered.
We've seen how SBI Card is maneuvering through this rapidly changing landscape. facing these challenges head-on while also seizing new opportunities.
They're dealing with things like those rising credit costs and adapting to these evolving customer behaviors.
At the same time, they're embracing new technologies, building partnerships, and showing a real commitment to financial inclusion.
It's a really dynamic story, and there's still so much more to come.
Stay tuned for Part 3 of our deep dive, where we'll explore SBI Card's strategic priorities and look at how emerging trends might impact their business.
We'll analyze their growth strategies, check out the competition, and really consider the long-term outlook for the credit card market in India. Until then, keep those questions coming.
And keep exploring.
Okay, so we're back for the final part of our SBI Card deep dive. We've looked at their performance, the challenges they're up against, and how they're dealing with this constantly changing market.
Right, and now we got to look ahead. What are SBI Card's big plans, How are they going to set themselves up for success in the long run?
Well, one thing that really stands out in the report is this big focus on deepening those customer relationships. It's like they want to be more than just, I don't know, a credit card company.
Exactly. They want to become like a full-fledged financial solutions provider, offering a whole bunch of products and services, that cater to all those evolving customer needs.
Yeah. So going beyond just those credit cards, what else are they getting into?
Well, they're moving into things like personal loans, insurance, even wealth management.
Wow. So basically, SBI Card wants to be like the one-stop shop for everything, all their customers' financial needs.
Yeah, exactly. And it lines up with what we're seeing across the whole financial industry. Everyone wants to offer this more integrated and comprehensive experience.
It makes sense. People want things to be simple. They want that personalized service for all their money stuff.
Absolutely. Another big priority for SBI Card is harnessing the power of data and analytics. They're really using that data to understand their customers, personalize what they offer, and improve their risk management strategies.
Data is everything these days, right?
It's incredibly valuable, and they're using it to create more value for everyone, for the customer and the company. Okay, so now let's talk growth. How's SBI Card planning to get more customers and really grab a bigger piece of that market share?
From what I see, they've identified a few key areas. They want to reach those underserved segments we talked about earlier, expand their whole digital presence, and really build those strategic partnerships.
Right, and they're focusing on millennials and Gen Z, those younger generations, the digital natives. They're super comfortable with online banking and finance stuff. They represent a huge growth opportunity for, well, the whole credit card industry.
And SBI Card's putting a lot of money into their mobile app and those online platforms to make sure they're really catering to those tech-savvy customers.
It's all about meeting those customers where they are, right?
Yeah.
Of course, we got to talk about the competition. SBI Card's not alone in this. You've got traditional banks and all those fintech startups. They're all after the same customers.
It's a total battle for loyalty and who gets a share of those wallets.
But SBI Card has a few big advantages. They've got that strong brand recognition, a massive network of merchants and partners, and that deep understanding of the Indian credit market. Remember we talked about that?
Plus, their connection to the State Bank of India gives them access to a huge pool of potential customers.
That's a massive advantage for sure. So taking all that into account, what does the future hold for SBI Card?
Well, it seems like they're in a good position for more growth. India's economy is doing well. People have more money to spend. And the whole shift to digital payments, that's only going to get bigger.
But they can't just sit back and relax. They need to stay agile, keep innovating, and really put the customer first. The credit card world is always changing.
They got to adapt to how customers are behaving, all those new regulations, and all the changes in technology. It never stops. It really is a marathon, not a sprint.
Yeah, I couldn't have said it better myself. This deep dive has given us a great look at where SBI Card is today. Their goals and what might affect them in the future.
You've seen what they're good at, where they need to improve, and what their vision is for the future.
It's been a fascinating journey, and it's really only just beginning.
Thanks for joining us on this deep dive into SBI Card. We hope you've gotten some great insights and understand their journey a little better. It's a really interesting time in India's financial landscape.
Until next time, keep exploring, keep learning,